Morning. Thank you for joining today's daily webinar. Where we directed solo 401k plan through a solo 401k participant loan. Please like this video as it helps to get this information out to other solopreneurs like you. As always, today's daily webinar is for educational purposes. We're not providing tax or investment advice on today's daily webinar. Let's take a look at some questions here before we get started in discussing how to borrow from your Fidelity investment self-directed solo 401k through a solo 401k participant loan. Here's a question here. I recently opened a solo 401k. I would like to know, since my 2024 W-2 did not report on the profit sharing amount, can I still make profit sharing S-corp to the Roth account? Do I need to correct the W-2 in order to do so? Alternatively, can I just make the profit sharing to the pre-tax account? If so, can I roll over the amount to a Roth account right away? I guess my concern is not to correct or amend anything related to payroll taxes. Good question. So the solo 401k plan does allow for both pre-tax solo 401k contributions as well as employer Roth solo 401k contributions. In short, due to Secure Act 2.0, you can now choose to make your employer profit sharing contributions as Roth instead of making them as pre-tax contributions. Now, it's a little quirky if you make them as pre-tax solo 401k contributions because, if you make them as Roth employer contributions, because you're going to get a deduction on the Form 1120S. So on the S corporation side, so let's say you make a $25,000 employer Roth solo 401k contribution, you're going to report that employer Roth solo 401k contribution on the Form 1120S. It's going to be reported on, let me see if I can pull up the exact line number. Give me a moment here. Okay, let's find that specific line number. So you're going to report that on the Form 1120S, line 17. So regardless if you make it as an employer Roth solo 401k contribution or as an employer pre-tax contribution, you still report that on the Form 1120S, line 17. In other words, you do not report employer contributions on the Form W-2, whether employer Roth solo 401k contributions or employer pre-tax solo 401k contributions. Instead, they get reported on Schedule 1. They get reported on your S Corporation Form 1120S, line 17, if we're talking about an S Corporation. Let me share a link of a cheat sheet we have that you can review so that you can find out more information on what I'm talking about. Now, I used the word quirky earlier because if you make it as an employer Roth solo 401k contribution, yes, it's going to be deductible on the Form 1120S. So your 2024 Form 1120S for your S corporation. However, it's going to be treated as a taxable in-plan conversion. So employer Roth Solo 401k contributions are deductible on the 1120S corporate tax return, but then you turn around and it's going to be treated as an in-plan Roth Solo 401k conversion. So now it's going to be taxable on the personal side. So on the the Form 1040 tax return. What is more, since you are just now making that employer contribution as a Roth or even as a pre-tax for tax year 2024, which you are allowed to do so, you can do so until September 15 if you filed for an extension for your 1120S tax return. However, if you make it as an employer Roth solo 401k contribution, it's going to be treated as an in-plan conversion occurring in tax year 2025. So you're going to get a deduction on the employer side, the Form 1120S of the 2024 contribution, but on the Form 1040, it'll be treated as a taxable in-plan conversion for tax year 2025, not 2024. So make sure to complete our in-plan conversion form if you make it as an employer Roth solo 401k contribution, because we have to issue that Form 1099R, which won't be issued till January, February of next year, so in 2026. So that's what I mean when I use the word funky. Let me share that in-plan conversion form that you'll want to fill out if you decide to make it as an employer Roth solo 401k contribution. All right, let's see here. Look, we have another question here from Math Lacy. For Roth contributions in my solo 401k Roth account, does it need to come directly from my company LLC account? Or because it's post-tax, can it come from my personal account for an after-tax contribution to the solo 401k after-tax account up to 8,000 or over 65? Can that contribution come from my personal account since it's after-tax funds? Well, so bottom line is, what matters is that you had the required earned income to justify that contribution. For instance, if your LLC is taxed as a sole proprietorship, you're going to want to make sure that you reported enough earned income from that sole proprietorship, which would be the amount listed in Schedule C, line 31. And then you have to subtract 1/2 of self-employment income tax from that figure, which our calculator will do for you. And then you can make the contributions, and they can flow from your personal bank account or business bank account. It doesn't really matter. What matters is that you ultimately had the earned income to support that contribution. So if you did not report enough self-employment income from your self-employed business to justify the contribution, then it cannot flow from your personal bank account because you have to have enough earned income to support the contribution. Another example, let's say your LLC is taxed as an S corporation and you report enough gross wages on the W-2. Well, whether employee, employer, or voluntary after-tax contributions, they can flow from your personal or business bank account. What matters is that you had enough W-2 wages from that self-employed business to support that contribution. Okay. Take a look at some more information here. Again, please like this video to help get this information out to other solopreneurs like you, and subscribe to our YouTube channel. Now we're going to start talking about how to borrow from your Fidelity Investment self-directed solo 401k through a solo 401k participant loan. And then we'll come back and take a look at some more questions here. So let me share my screen. And we'll get started on the main topic for today. Again, go ahead and ask your questions here on the live chat. We'll go over those questions today as well. So you're going to be able to borrow from that Fidelity Investments self-directed solo 401k brokerage account if you open a solo 401k from my solo 401k financial, because the self-directed solo 401k offered by my solo 401k financial allows for solo 401k participant loans. So to clarify, Fidelity Investments also offers their own solo 401k plan, which does not allow for solo 401k participant loans. However, Fidelity Investments does provide what they refer to as investment-only non-prototype brokerage accounts for a self-directed solo 401k from my solo 401k financial. And because then my solo 401k financial solo 401k plan allows for solo 401k participant loans, you'll be able to take a loan from it. You're going to be able to process that participant loan. The actual proceeds will come from that Fidelity non-prototype investment-only brokerage account that's set up for the solo 401k from my solo 401k financial. You'll be able to borrow from those funds by writing a check, because Fidelity will provide a checkbook, or you can have the funds wired out. So you would submit a wire directive to Fidelity so they can wire the funds out for that participant loan. Let's talk a little bit more about the 401k participant loan rules, and then we'll shed some more light on the logistics of borrowing from the plan. So in order to borrow from a solo 401k plan, you must adopt a self-directed solo 401k plan from a plan provider such as my solo 401k financial, whose plan documents allow for loans. And then we, as the provider of the solo 401k plan, will draft the actual loan documents as specific loan documents apply when you take a loan from a 401k, including a self-directed solo 401k plan. So we'll prepare a loan application, the loan agreement, and the loan payment amortization schedule. We typically prepare those documents once you let us know how much you want to borrow from the plan. Now, the plan rules are the same across all 401k plans regarding borrowing from a 401k. So there's going to be a level amortization schedule where payments are made monthly or quarterly. The loan typically must be repaid within 5 years unless you use the proceeds for the purpose of purchasing your primary residence. Then the loan can be extended to 15, 30 years, known as the primary residence loan exception. So that allows you to borrow above the 5-year period, up to 15 to 30 years. The loan amount is you cannot exceed the statutory limit, which is 50% of the account balance, or a maximum of 50,000. For example, if the balance of your solo 401k plan is $200,000, the maximum you can borrow is 50,000. Another example, if the balance of your solo 401k plan is 60,000, the maximum you can borrow is $30,000. The interest rate is typically the prime rate plus 1 point. It's a fixed rate. You pay your own 401k back. So those loan payments will flow back to that Fidelity investment only brokerage account for the self-directed solo 401k plan. So when you're ready to take a loan from your self-directed solo 401k, you first need to review your account balance to see how much you have, obviously. Then you need to determine the loan period. Again, it's 5 years unless you use the proceeds towards the purchase of your primary residence. Then it can be extended to 15, 30 years. And then you can complete our online loan request form, which will prompt us to prepare those loan documents up above here, because the loan has to be documented. That's an IRS regulation. Then you'll be able to download the loan documents, sign and upload. And then here, the disbursement, that's where we'll provide you with information to take the proceeds from that Fidelity Investments only brokerage account that was set up for the self-directed solo 401k plan offered by my solo 401k financial. Now, those proceeds can be, again, you can write a check because Fidelity will provide you with the checkbook for that brokerage account for the self-directed solo 401k. You can write a check for the proceeds of the loan, or you can submit Fidelity's wire directive, which we can provide for you. We can draft that for you and send it to you, and then you'll submit that to Fidelity and they'll wire the funds to your personal bank account. Now, the loan minimum is $1,000, so you can't borrow less than that. We talked about the loan maximum already. The loan maximum is per participant. So if you have a solo 401k plan where both spouses are self-employed in the same business and therefore participate in the same plan, and they both have balances in the plan, they can each borrow from their respective solo 401k funds up to these limits I described up above, that 50% limit, not to exceed $50,000. And it's important to understand that the loan proceeds have to flow back to your, that they flow from the Fidelity Investments brokerage account for the solo 401k. Those loan proceeds need to flow to your personal bank account because the rules allow you as the individual to borrow from the plan. So they cannot flow to your business bank account, for instance. They need to flow to your personal bank account because you are the one that's borrowing from the plan. Likewise, when you make the loan payments, they need to flow from your personal bank account back to the Fidelity Investments brokerage account, and you can do that via ACH, where you link your personal bank account to that Fidelity Investments only brokerage account for the solo 401k for those loan payments. So the interest and principal go back, they flow back to your Fidelity Investments brokerage account. Okay, so that's how the loan works, the solo 401k participant loan works. When you utilize a solo 401k from my solo 401k financial and you use Fidelity Investments to hold those self-directed solo 401k funds and what Fidelity Investment refers to as investment only non-prototype brokerage accounts, because the Fidelity Investment solo 401k does not allow for loans, but the self-directed solo 401k from my solo 401k financial does. And many of our clients have the capability to use Fidelity Investments for the solo 401k that we offer. All right, so again, please like this video as it helps to get this information out to other self-employed solo 401k solopreneurs like you. In the meantime, let's check for some more questions here. Here we go. For the previous question, so the personal income tax I need to worry about is for 2025, not 2024, right? Are you saying that if an S Corp contribute pre-tax and it's reporting the 1120S, everything from the company's side is taken care of? But if I convert that into Roth right now, the in-plan conversion I need to take care of is for 2025, which I complete the form you mentioned. It will take care of 2026. So if you decide to make an employer pre-tax profit sharing contribution to the solo 401k for tax year 2024, because your self-employed business is an S corporation, you would base that contribution on your W-2 wages from tax year 2020, because you're seeking to make a contribution for tax year 2024. And for an S corporation, you have until your business tax return due date plus timely filed extension to make the prior year employer pre-tax profit sharing contributions. So again, it would be based on your 2024 W-2 wages. However, the employer profit sharing contribution is claimed on your Form 1120S. It's not claimed on the W-2. You got to have the W-2 wages to support the contribution, but you take the actual deduction for that employer pre-tax profit sharing contribution on the Form 1120S. It's not taken on the W-2. And then if you decide to process an in-plan conversion of those pre-tax employer profit sharing contributions here in 2025, then it'll be taxable as a 2025 in-plan conversion. So the Form 1099-R would get issued in January, February of 2026 to report the 2025 in-plan conversion. So make sure to complete our pre-tax in-plan conversion form on our website that I shared earlier. All right. It looks like we've come to the end of our questions today. Again, thank you for joining this morning's webinar. We'll be back again here at 1 p.m. Pacific time. Until then, have a great rest of the day.